Hey everybody, welcome to Trading Capital's live analysis. And basically you can see this was your FTX pivot and you tag that level to a T around that 44,491 level. Now, you did already come down on that initial drop and tag this first support level back to this parallel channel. Now, on the weekly chart of this parallel channel, we have actually not confirmed a technical breakout yet. We need another weekly closing high above this high pivot in order for a true breakout of this trend to occur. But obviously we're not getting it this week unless something changes from here until the weekend. But looking on the daily chart of Bitcoin, USDT chart, we're actually seeing Bitcoin coming down just ever so slightly. I still think Bitcoin is very much overbought, and the consolidation, we want to watch what type of consolidation do we put in here on Bitcoin. If you use some short-term moving average analysis, so the 7 and the 3, we have had now a crossover where the pink moving average, the 3-day moving average, intersects with the yellow, the 7-day, in a downtrend. Whenever that typically happens, it is signifying a trend change to the downside. Now, if we were to get back above that, then that would likely obviously signal we could have more upside. But when that trend changes, and it changed very harsh on a big volume candle, it likely means that we're actually going to test the next support leg, which is a little bit lower from here. And then I think we'll have to reassess. But in my opinion, based off of a previous cycle pattern and movement not that long ago, I'm just going to erase these two moving averages, the 7 and 3. But based off of a previous pattern on Bitcoin, what I could see transpiring, and we actually have to go back on our chart. So I'm just going to move my other mouse here because it is a little bit easier. But basically, if we scroll all the way back on our charts, what I believe we're trading in right now is this very similar period like we did over here, where Bitcoin had this crazy run, and then Bitcoin had a 3-week pullback. You can actually see it on the weekly chart. It's very blip, but the weekly chart shows basically a 1-2 week pullback with a little bit of a low. So call it 3-week pullback in Bitcoin in this period. And it doesn't look like much, right? But if you had got shaken out on here, you would have had such FOMO when Bitcoin made this new all-time high here back at 64,000. But this drop alone, which is what I think we're trading in right now, I think this drop was about a 30% drop from the high pivot to the low pivot. Why do I think this is a very similar price action? Well, I'm going to show you why. Using the RSI divergence theory, basically, if you look at the RSI, we made a high pivot on this candle. It matches up with the high pivot on the RSI. Obviously, we got a big pullback on the RSI, which was that 3-week pullback, a 30% drop in price. Just remember that. Now we look at the same RSI here, very overbought on the weekly chart, very much extended. We could be in the midst of another 3-week pullback, basically aligning with this cycle. Again, the RSI was overbought on the weekly chart in that green overbought zone, just like it is here. And now we're starting to pull back as well. And I do think that if we follow that same cycle, let's just say from that high pivot to the low, we pull back, 30%. Take a look where that 30% could take us. I'm just going to actually drew it over a 3-week period. I'm not saying this is going to happen, but a 30% pullback, in a 3-week course would basically almost take us back into this pivot range, this pivot high, this consolidation, and this impulse green bar breakout. So I'm watching over the next couple weeks to see how this risk asset evolves, but it's looking very similar to this price action over here in Bitcoin. And that would be a pretty impeccable pullback if Bitcoin does experience that. And then on the same thing for the bulls on the long side, which obviously you have to look at both sides. Look at the run that Bitcoin actually had after that pullback. So we're talking about 125% run that it had. Now, obviously this period here is much different to this period, being the fact that this period had QE, zero interest rates across basically many of the G7 countries and emerging markets, massive liquidity coming into the market. So it's definitely a big difference in terms of what we're doing, but just technically speaking, there's a lot of similarities that could evolve. Now, obviously, if Bitcoin has this pullback and it follows the same move to the upside, what would 125% rally after a 30% pullback look like? We were talking basically, I got to keep zooming here. We're basically talking a new, I believe, all-time high that would be. So 125% rally from there would put us at piercing that all-time high. So again, you don't want to get caught in the event that Bitcoin miraculously does some sort of a move like that. That's all I am saying here in terms of trading this particular asset class, that you have to be nimble because this thing can move pretty sharply if it wants to. Obviously, we're still waiting the Bitcoin spot ETF, but time will tell. My base case is for Bitcoin not to basically move to this high side. I do think that after a pullback, we could see a fairly large bounce, but I'm not pricing in a new all-time high just quite yet. I think 2024, we have to gain more insights into the overall price action. Overall, there is the halving that we have to contend with. The halving is typically bullish in Bitcoin and crypto. First Bitcoin and then the altcoins. Let's just take a look at some of the other altcoins. Right now, Bitcoin's market cap is wielding 800 billion. Ethereum's 260 billion. And then you have Tether around 90 billion. And BNB. BNB is actually trying to make a move recently after it got absolutely slaughtered. So basically, BNB, let me get the USDT chart. BNB had that negative news when CZ stepped down because of potential fraud. Now, if you look at Binance, it is actually trying to potentially make a little bit of a breakout here on the chart, but you're still potentially forming a right shoulder. The volume that has come in here is absolutely huge. You're still inside of this reversal candle over here on that CZ fraud announcement. So technically, there you have not broken out of this bearish candle formation. This is all inside bar, but it is trying to gain a little bit of momentum to the upside. What's interesting is BNB has actually been rallying when the likes of, say, now crypto or Ethereum has been pulling back. Look at Ethereum pulling back from the highs. I still think Ethereum on the weekly chart is likely going to retrace back down to this breakout trend line. I think call it 17, a pierce of 1800 is probably where Ethereum is likely going to go. There might be some intraday, a few day bounces in between, but I'm looking at around 1800 psychological whole number where I think Ethereum gets its next bounce on the market. If you look at the total crypto market cap, again, that has also been selling off, but BNB has actually been rallying here. Total crypto market cap is interesting. I'm just going to clean this chart up here because you can see right away, if you do a fib retrace from the high to the low on the crypto market cap, we actually hit basically the 382 fib retrace at 1.67 trillion to a T. Crypto market cap is still wielding 1.5 trillion deep in liquidity. Again, you're kind of in this double parallel channel where you hit the top end of the range, rejecting, and now you're looking to hold. If you hold the top end of the range, you could actually chop inside of this low to this high range, low to the high range until you get a definitive breakout move. But if you get a weekly close back inside this lower boundary range, then it does leave the probabilities do increase that you could actually get a move back down to the low end of the range, and you could still be forming higher lows on the trend. So therefore, you could still be seeing a much larger accumulation pattern in play in the crypto space. I would love for crypto to come back down and test this channel and then create these higher low scenarios, because if you're a bull and you actually hold this channel and create those higher lows, then that could technically be bought off of a potential trend change and breakout. So lots of interesting things as we shape up into the cryptos. All right, let's dive into the S&P 500. So I'm going to pull up the SPX chart. Obviously, everybody knows that it is the Federal Reserve meeting tomorrow. So the FOMC will be set to they're set to hold rates steady at what they currently are, around that 5.5% Fed terminal fund rate. Now, there's always a chance, based off of the CPI data that we got today, although it came in line with expectations, when you look under the hood, it wasn't all that impressive. Sure, it might be a little bit of a Goldilocks number, but it wasn't that impressive to me. I'm going to tell you why. I don't think it was that impressive because of the simple fact that you had the month-over-month data increase. And when you look at natural gas, when you look at oil, oil has absolutely been demolished recently. So when you take into account those factors alone, the CPI print really wasn't that impressive considering things. And when you look at core inflation, it's still well above the 2% target that Jerome Powell wants. And I think it's going to be his job to naturally come out and be hawkish tomorrow. Whether or not markets believe him or not, that ceases to remain yet, but I think he is going to be hawkish. That core inflation is still too high for his liking. Markets are basically trending all-time highs. Energy prices have collapsed. And basically, when you look at what's going to bring the inflation down to that target, I'm hard pressed to see what is going to bring inflation down to that 2% target. Now, let's look at some levels on the SPX. Certainly, the risk to reward heading into the largest FOMC meeting in the world is either going to set us up for a big pullback or it's going to test this double top. Those are kind of my two theories here. Right now, the risk to reward certainly does not favor the long side. If you're buying this market with 1, 2, 3, 4, 5, 6, 7 weeks up in a row, that's certainly a risk that I am not doing at this point in time. Resistance levels, you have a weekly gap here at this 46.63, and then basically you have your all-time high pivot at 48.17 on the SPY. One trend line that I am watching is this trend line. Now, there is a potential that we could actually come up and test this trend line tomorrow, but this is going to be the big resistance trend line that I'm watching. I think that there's a scenario, if I actually draw a parallel channel on this, where we could actually come up into this channel and then just chop back down to the midpoint of this range and potentially even lower. But it's going to be a big FOMC meeting, and we certainly have to keep our wits about us as we head into that meeting tomorrow. But overall, I've given you some of the resistance targets. There might be a little bit of upside into this gap or into this key trend line. But really, when you look at it, I mean, let's just see what the upside into this trend line would yield you on the S&P 500. Let's take a look here. You're calling it about 1.25% on the S&P. Actually, a little less. Call it 1% on the S&P 500, where you could potentially see a rally into that specific level. If you look at the volume has been slowly starting to climb above average. That is showing us, okay, yes, there's a lot of people buying, but there's also some people trimming and taking profits. Whenever you have volume, high volume, it means there's buyers and sellers present. Low volume typically means that there's just buyers present. High volume typically means there's buyers and sellers present. Obviously, the buyers net positively overworked the sellers, but it is just being mindful to watch those volume trends on the S&P. Overall, what is my expectations? My expectations is for Powell to actually just hold interest rates but come out hawkish. There's a small part of me after today seeing that inflation numbers and digging a little bit deeper, especially with the month over month, where I would love to see him actually shock the market with another hike. But, there could always be a quarter basis point hike. That would certainly be off the radar of most consensus expectations. So we'll just have to wait and see what Powell does, but I'm expecting a more hawkish Fed. Let's just look at where the 2-year yield is currently trading as we head into that meeting. The 2-year yield is basically trading at 4.72. The Fed fund rate is at 5.5. Huge discrepancy. I'm still in the camp that the 2-year yield has to move up to about 4.85, retest this original consolidation channel where it broke down. So that would align with the thesis that Powell should be more hawkish in this meeting if it forces rates to move up back to this channel here. That would be in roughly a 2.84% rally. And then if you were to retrace to the larger term trend line, which I've showed in a few videos, if you were to retrace back up to this trend line, we're calling about a potential, 5, 6, 7% move up in the 2-year yield. Equity markets certainly wouldn't like that. And what I found interesting today is that despite the dollar and the yields negative, when you look at the Russell, the IWM, it did not perform today. It actually closed basically slightly negative but flat. So the Russell did not perform today. And when you have the S&P and the Qs green and the yields and the index and the dollar negative, generally the Russell has been the risk appetite trade for investors. And the Russell, believe it or not, is putting in more consolidation than the S&P and the Qs. So when you look at it on a technical perspective, from say an overbought or oversold condition, The Russell is more technically sound to move higher than the S&P and the Qs, but it did not do so today. It did not follow the lead. This has been the leading indice off of the lows. You've seen a broad participation in small caps. The breadth has been increasing, but you did not see the Russell participate today, which is a little bit of a red flag in my opinion. But there's going to be lots to consider moving forward. But I just thank you all for tuning in. And basically, again, we just have to wait for that market reaction tomorrow. It's going to be very, very interesting, in my opinion. I think there's going to be a lot of interesting shocks to the market that could surprise. I mean, we could actually have a face ripper tomorrow, a final, squeeze to the upside. We could have a big, big dump, but in a few hours, we will actually know the reaction and what Powell says. But definitely pay close attention to Powell's language, because that core inflation is still staying sticky, and it's never good when the month-over-month data increases from the previous month, despite oil, despite energy absolutely imploding. On that note, thank you all for tuning in. Please give this video a big like down below, and we will see you on the charts. I will be live trading the Federal Reserve interest rate decision tomorrow, 1 o'clock. I'll be on the air around 9:15. Pretty much tracking the markets all day, so I'm going to encourage you to try to tune in if you're looking to see how I trade it intraday. I have swing trades already open, but I will be looking to catch that day trade volatility, where you usually have two events in the S&P 500 and the markets, where you have that initial rate hike volatility, and then you have the FOMC press conference with Jay Powell. So typically there's two bouts of huge volatility that traders can capture on the upside and the downside. The plan for my FOMC trading is basically you want to do the opposite of what the market does. If the market dumps, this is a 90% track record. If the market dumps, basically on the FOMC rate hike, you typically want to buy that dump. So let's say on the S&P 500 tomorrow, we, just say where we open up and it's the rate hike decision. Let's just say the rate hike dumps us. You often want to buy that initial dump, because you get a small bounce, and this is just a day trade. You want to buy that initial dump for a bounce, and then if it rallies to new highs, you want to short that pop. So you often want to do the opposite of what is occurring in the market right after that initial reaction. Thank you all for tuning in. Again, hopefully we'll see you in the live stream tomorrow, and definitely get a good night's rest. Take care, everybody.